Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. Stock market overview and stock overview part two. Part one featured Bob Iacchino. So we didn't get to do all our levels we normally do. So I'm going to continue it in this session. Hope everyone enjoyed Bob's contribution in the last one. If you didn't catch it live, please do watch it on the replay. We had an interesting discussion about rate hike cycles and market returns doing them. By the way, again, if you're new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers and subscribers, please like and comment on the videos. Let's see. Hello, hello, Wavy. Hello, Tesla Force. How are you both doing today? Hope you had a good trading day and you possibly got to take advantage of the rally. Just a reminder for the people who weren't here in the first session, we have retail sales tomorrow. Also, I'm going to keeping an eye on the housing market index and business inventories coming out at 9. It's 9 Central. I do everything out Central Time since I am in Chicago, well, a suburb of Chicago. Retail sales is at 7:30 Central Time. FOMC is at 1 p.m. Central Time, 2 p.m. Eastern. And the press conference, which is the really important part, is at 1:30 Central. So make sure you are prepared for that. Again, the heat map, everything up except for oil stuff across the board. Should not have been a shock to anybody. Again, FOMC, the 25 is baked in. I don't see them doing a 50 basis point, but 25% baked in. So that's where we stand here. Let's get to that daily chart. Daily chart, again, big move coming back down in the European session, testing that low harmonic, and then we took off. This is why you should catch the market preview I talked this morning above this 4177, 4178 level into the clear path move, and then all the way up. Then what I also did was put on the harmonics. The harmonics, well, I'll show you exactly what I did. For the long stuff, it just started ratcheting it up. So here was my first pausing area. Then I shifted to the longer term pausing area first here. But then here, when we got that pullback, you know how I've talked about many times, I do the same thing that I've talked about with Tesla and everything else. I shift to that 15-minute watch, especially during lunch, to that pullback to the 15-minute rotation zone, and then rotation higher. My next major target area was this 42.55, 42.53. Did not get that 42.66 level. Pausing out there. So now I have it updated to the end of the day. By the way, let's take a look at this longer term. Before I do that, hey Amit, how you doing? Hey Dan Jett. I missed the market overview and was watching it. When you say 4-hour buy signal, what are you looking at? 4-hour buy signal is based off of a percent B buy signal. Where's my 4-hour? We had a 4-hour percent B buy signal right here, and we have a daily buy signal right here. It's based off a percent. It's based off a percent B, which is based off the Bollinger Bands. So that was the 4-hour this morning, and then it continued higher. But there are so many ways to get on this move. I just like this percent B buy signals. If you want me to release that, let me know. I just tend to call them out. But we also had a daily. Why the daily is still aggressive is because you're against the daily and weekly rotation zone. So this is not something you just put on and walk away for a few months. This is something that has to be managed actively. Why? We could roll over easily. Percent B is an indicator. See here, this is a percent B indicator, and I have a specific setup I use. It's based off Bollinger Bands and moves, percentage moves with the Bollinger Bands. I'll have to record something on that too. Then I'll probably make that another possible sale thing, but it won't be that expensive. I try to get stuff out there for good prices to people. It's just going to have to cover my recording time. I'm running so far behind with all this market action. And then the multiple live streams, it takes time, and then I get tired after this. So I do like to unwind at the end of the day. But that's my problem, not yours. Pullback level, I'm going to be watching, especially, I'm going to keep an eye on this Asian. I'm waking up in European, but I'm watching the return. There's a couple areas. Now we have a couple pausing points. Keeping an eye at about 42.40. If we drop below there, I'm watching within the 1 hour rotation zone. Now, it's interesting. You don't want to get too far back into here because now it's another clear path move back down. So if you start getting a lot of selling and we start breaking below the 1 hour rotation zone, I'm going to watch for the bigger retrace. Until that happens, I'm watching for any pullback support in this area, 42.40 to about 42.24. That's my first major support area. On the next push higher, we still have a 1 hour rotation zone here. A 1 hour clear path move up here. So I'm going to be using 42.80 to about 42.87 and then 42.96, which is close enough to 4,300. And then you see above, once you start getting above this 42.86, it's what I call an advanced clear path. All right. And you just have to know that the next stopping area is going to be up around this 43.40, 43.45 area. So could we see that tomorrow? Yeah. It's going to get interesting, though, because as you get in the morning, and we'll do this in the market preview, tomorrow you will get choppier as you get closer to the Fed. And even though the rate hike is pretty much baked in, you're still going to have what the press conference does. Now, where are my longer term targets if we have another major rally day? Above 43.44 tomorrow, then the next area isn't up here. You see all these prior tops of the candle bodies about 43.82 with the declining trend line, and above there we have this 4,400 area with the declining 50. So we have major stopping points up above. I'm really keeping an eye on this 43.44 level, though, because that's the declining rotation zone, this prior support area, which held, and then we spiked into it and closed above it. Then we dropped back down, retested, and closed below it. So I'm going to watch overall, especially by the end of the week with options expiration, this 43.44 level. All right, so that's going to be very, very key for me to watch. So that's the episode. Let's see. Did I say hello to Asashi? I don't think I did. Sorry, it's been another long day. Just curious, help me with the progress in your time. How does Patreon work to support you? I'm guessing Super Chat helps, but sure, Google keeps a percentage of the chat. Yep. Patreon keeps a smaller percentage, or buy me a coffee. The links are in the description below. Everybody takes a percentage. Any way that works for you, though, between Patreon, buy me a coffee, and Super Chats, whatever somebody likes. Again, everybody takes a percentage, but they're all just to your liking, and that's why I do these donation things, because it does help pay for some of my time. But I'm trying to get, like I helped people last time with their crude put positions. Sterling made some decent money, and everybody shouldn't be surprised with this move up, and the crude move down, and the gold move down, and the silver move down. None of these should have caught people off guard if you are members of this community. So, what time's the Fed meeting? The Fed release is 1, or your Eastern time, so it's 2 Eastern, but the press conference is what you should be really focused on. That starts at 2:30 Eastern, Wavy. I don't know anybody who's going to get caught off guard if the Fed hikes a quarter of a basis point. 25 basis points, sorry, a quarter of a percent, 25 basis points. So that's where we sit. Did the SPY put in a double between Feb and now? This, you have this hitch, but technically this is a very big hitch. This lowers the probability drastically from all the research we've done. If you wanted to look if the targets fit, yes. And it is lower probability unless it were also closed above the weekly rotation zone. But you'd need a weekly close above this rotation zone. The problem is this hitch, and that would only be on a weekly basis. Why? The daily, you can see here the daily only hits the first target. And even if you were going to trade off this, even because with this, I would just be targeting, again, if we had a super rally, which can happen still, you can still get these monster rallies even with long-term sell signals. My target would be 45.77, which is virtually the high, right around this high before this last major down move. So that's the target I would be utilizing. Let's take a look at NASDAQ. Again, I'm not going to repeat all this right now, but you still see that area that we broke above. I was watching this 13,120 today. And then we had that clear path move, stalling out there for a while. And then I did my harmonic projections, 13,462. And you see how we could not get closed above there, paused out there. With that, we'll just update this end of the day to give us an idea of what to watch for tomorrow. Now, also remember, clear path move tomorrow. So pullbacks, I'd be watching this 1 hour rotation zone, and you can still key off this 13,367 on any pullbacks. You don't want to see it drop below about 13,233. That would then be into another major clear path down and outside of this major support level. 13,554 and then 13,622, which is a significant level and a harmonic. And then above there, I'd be targeting around this 13,784 area. So that's it. Remember, it's just touching the daily rotation zone. So even up to here, even up to this 13,784 area is just getting us back to the other side of the daily rotation zone. And slightly above that, these targets aren't valid anymore, by the way. Slightly above that, we have the longer-term declining trend line. So there's a fair amount of resistance up in this area. Dow, you can see this double was still, this was a shorter-term double. This double, this did not invalidate it technically, so I'm still using these targets. This was the double. This did not invalidate it. So I'm still keying off of 33,815 and 34,036 are my two major Dow targets. For tomorrow, pullback, same thing. Keep an eye on that 1 hour rotation zone. Dow 33,280 is the first level of support, and then you don't want it to get below this rotation zone. And back below 33,000 is really bad. Well, I don't need. We can look at the Russell tomorrow morning again. Crude. We pulled back. The only thing I'm watching is we still have this little potential double bottom. Did not hit the first targets, but the targets are 98, 61, 99, 46, 130. If we come back down in this area, it's then a triple. And I start focusing on continued bigger pullback in crude, where the next major level I have at this point is about 88.91 to about 88. If you want a shorter term levels than that, here's a great way to use the most recent harmonic, which would be here. And you'd want to, because this helps even if you're not trading crude, this helps to identify levels to watch for potential reversals patterns or to help you trade the stocks. 90 is the first, 90.87 is the most intermediate level. So let's see. Powell's outlook will be key. Yes, I agree. Mike, I'm going to ask because I feel like sometimes I don't see all the doubles. In the purest form, what are you supposed to look for? In the purest form, you're supposed to look for this. I hope you can see this. I don't want to take. I should lighten this color. Let's see if I can lighten that. Let me lighten this a bit. Hold on. Let me just make this a little lighter. Here, I'll just remove that for now. There we go. Because I know the levels I'm watching. This you're watching for, first of all, for a double bottom, you're watching for a down move, and then you're watching for two bottoms. And I have certain rules. not released yet, but they're in the same vicinity. They could be a little higher, a little lower, and then you're watching for it to get back above the peak. So you're watching for some pattern like this, and you make sure it's reversing a move. Then I'll get to some stocks. Gold, just because we've touched on that a few times now. You see here we had that head and shoulders. Here's that head and shoulders. Brief pause at that first target. Now not hit the second target. 1904 is the next target, and that's the one I'm really focused on. And then 1877 on these pullbacks. I was looking to add some gold position, so that still has potentially lower price action, but really the key is if you do drop below this 1905, 1904 target, 1877 is major, so return to this major resistance becoming support. Silver, bouncing off the first target, also from a confirmed head and shoulders, and then the next target I'm really watching for the next rollover is 2430. Notes, couldn't even get back to the prior support becoming resistance zone. So nothing's really changed from the outlook, but I will keep an eye on this double bottom. Here's another example. Amit, here you go. You are welcome. Here's another example. So you see, you down move. Rotation up, coming back down. Now, I'm just going to go off the aggressive targets at this point because we don't know if that right-hand side is in yet. So here's how you come up with the targets. Again, it's 50%, 75%, 100%. And I'm doing it from this low to this high. That would be aggressive. This would be conservative, as long as this doesn't make another low. If that makes another low, you'd have to go. The aggressive targets are the ones farther away. And when I'm going against rotation zones, I tend to use the conservative targets. But I'm just giving you an example now. The safest play, especially for beginners, is to wait for a close above the peak. And on this will be the 4-hour time frame, although you could also, because it's valid on the 1-hour time frame, you could do it on a 1-hour close. And aggressive is just a way to trade above there. And then this is stop reduction. First target is always stop reduction again and partial profits. And this is full profits. You take off the rest of the position. Now, if I have strong moves, I do raise, stop, full profits. If it's a weak move, I do raise, stop, partial top profits, and raise, stop, and then full profits. That's how we trade them. And I will keep an eye on the longer term, like this on the daily. Let's say this triggered. I have the daily rotation zone here. So where would I really be focused? On that second target. I hope that makes sense. And for everybody else, there you go. There's another primer. Here's your Tesla. Then I'll get some other stocks. We talked about this even with the close below 62.5. I was watching it. Now remember, macro will trump micro. When you get the NASDAQ up 3%, you're going to have these moves in Tesla. Now this Tesla double bottom turned into a triple bottom, so this is off the table for those targets. Next thing I'm watching, if it continues, you see where it stalled out at the end of here. Next thing I'm watching for Tesla, 806 above there, you're into another clear path move. So that I would use the clear path targets. With this would then be stop reduction about 818.50, stop reduction 829, and you could always use some projections to take some profits. Here was, again, for the people who didn't, we had that little gap today, filling the gap, and then this is momentum bars. I'm going to reiterate this. Especially with the NASDAQ running, you see these momentum bars? Now, if you measured it from the low, you have the pullback to the 50%. As I like to do a lot of times, is using the start of the momentum bars. I watch for the pullback and holding on a closing basis, the 62.5%. So whether you did either one, it's roughly giving you the same signal. Rotation back up, that's the momentum bar play. And I talked about this in the preview this morning. And this is true not just with Tesla. You can apply this to anything. You play those momentum bars. We had this clear path move up here. And then the first target was that 795 area I talked about before. So that's a momentum play that you can do with any market. You just want those momentum bars. You want a retrace. What are momentum bars? There's very little overlap. This is another example of momentum bars. This is not momentum. This is just, you can have a chop. All right, see the difference between this? See this? This is a choppy up move. It's an up move, but it's a choppy up move. Versus this. This is momentum bars. This is a choppy up move. Momentum bars are generally stacked with the same color with very little overlap, and they're generally wide range bars. So when you have ignition momentum moves, boom, 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 I watch for that retracement. Now, if you just get one pausing bar, let's say it hovers. Pretend this red bar didn't exist. I'll give you a little teaching thing real quick, then I'll get on to some other stuff. If you, let's say we just had this one bar sitting here, and you ignored this bar, pretend it didn't happen, you just get one bar pullback, and then it launches again, then the only play then for me is to jump on, you know, it starts to rotate back up above this pausing bar. That's just jump on the momentum right there. All right. You need a close above the middle peak, yes. And you need the first and second targets to be within the candles that started the double. Okay? So, for example, back in notes. So here's the move that started it. You can have hitches in it. I'll even show it on the 4 hour. I mean, you have this move started it. And all three of these targets are within the move that started it. But if the third target is not, you need the first and second to be within the candle bodies of the move that started it. So that's another little thing right there. Otherwise, don't use the targets. Let's see what stocks. What stocks do we have? By the way, where are they? I can't find them now. Did I? Huh. I missed them. I thought I saw some stocks in here. Maybe not. Oh, by the way, I talked about playing the mega caps or growth stocks. If you didn't want to just pick a stock, you know, there were plays like, I went through these on the aggressive stuff, like NVIDIA up big, all right, 7%. And by the way, why I'm not long-term bullish, this is a really quick pop play. Why I'm not long-term bullish, just want to point this out. Anybody see a pattern here on the SMH, which is the semiconductor ETF? Shoulder, head, shoulder, pretty much a flat neckline, broken by last week. So yeah, we could easily get a rally back. You could even easily get a rally back in the SMH higher before rolling over. But that's so you have semiconductors, which will break down probabilities longer term. So like this is why I wouldn't turn NVIDIA into a long-term play. It came out of oversold with a divergence. You're against the daily rotation zone. So could it go higher still? Yeah. But I'd be aggressively moving up a stop on this. If you just want to play a basket, because I talked about mega caps, you can always trade stuff like this, intraday even. The mega cap growth ETF, which was up 3.24% today. So if you wanted to, I talked about mega caps were the area you could look for when we got that rally on. Or you can always go to, if you didn't want to play individual stocks, you can go like to VUG. See this? And again, these are not long-term plays. These are little bounce plays where it favors growth over value. But this was up 3.13%, not a long-term hold. Or you could do IVW. If you didn't want to try to pick an individual stock, up 3.04. Again, not long-term holds. What else? Interesting plays like Microsoft. But Microsoft also triggered a major sell pattern, so I will watch for another rollover in these. Oh, I'm glad somebody asked about another one that is a stock. MO that I like. MO. This actually triggered a buy pattern today. I like this on a longer term perspective. So you came back down into the rotation zone again. because you can get a tight stop about 48.20. You already see I have the chart marked up. It back in the rotation zone, still not back in the channel. This is the weekly. It's triggered a daily little buy signal today. So even on a pullback, if you want to keep an aggressive stop, like if it does roll over, the first aggressive area would be below $50 for me. If you want a little tighter, below 50.30 on a closing basis. Why? Because if it closes back down below the 50, it won't have held a key move. See, last it dipped in below the 50, then closed above it. Below the 50, closed above it. It's not been able to close below the 50 since the last time it closed below the 50, proceeded this bigger pullback. So that's the one thing I'd be watching with on your daily time frame if it did pull back, and the bottom of the weekly rotation zone, because if it pulled back below there, we'd probably get the close and then the pullback. If you want a wider stop, you're declining 200 and the 50 and a significant level is right around 48.20. So if you wanted to play this with a wider stop, those are, again, educational purposes only, suggestions. So, and the targets I have updated to the upside. Now this I like for a especially a longer term play. As long as those key levels hold above 53.84, return to the highs. I watch for 55. 55.25, 55.30 is a short term and a long term harmonic there. So that would definitely be an area to raise a stop for Morris. You still got to keep a tight stop on these though, from my perspective. And if it breaks below that, just wait for the bigger pullback and another buy re-entry. Head and shoulders, you're watching the head and shoulder. We don't have a head and shoulder yet. This has to roll over again. So we have a left shoulder. You don't have a right shoulder yet. I need to see a right shoulder form. I like this still as a long-term play again. But we might get a warning sign, see, because if it comes back down to form a right shoulder, and this is horribly sloppy with this, but it is still playable. It has to come back down. I'd watch for support with this, and it could still not close below the 50. And then to trigger, it has to get a close below this neckline. But we don't have a properly formed right shoulder yet. This is not a properly formed right shoulder. Even on the 4-hour, not a properly formed right shoulder. So it's still in bullish mode for the time being. So remind me if we start pulling back, our first warning sign again would be a close below the 50. Then I would consider that to be a short-term short play because it's reversing this move. Now it's not going to be, your targets aren't going to be all the way down here. So we will keep an eye on that. For retracements, you drew during momentum and there's a pullback. The 25 closed to keep it going. I start watching. I really like on momentum pullbacks. If it's just going to be a 1-bar pause, I like to see the close stay above the 25% retracement level. I think that's what you're meaning. I'm going to increase my put position on BBBY for the gap fill below. If it stays below 62.5% retracement, let's check in on BBBY. Yeah, I mean, we had that close the other day below there. It's pulled back into the rotation zone. Yeah, I'd be watching for another rollover play, especially even if it bounces up to this 2165, the declining 200 again. I'd watch for another rollover play. The only risk with BBBY is it's still a takeover candidate. Keep that in mind, Sterling. That's your risk. So you have to be prepared for that. And they are, I know, but I don't know, but I believe behind the scenes they're being shopped for a potential takeover deal. So just keep that in mind. But because if there's a takeover announced, you're playing it with options, so you have risk, but you have limited risk at least. I would not be shorting the stock at all because of the takeover potentiality. But it's definitely playable with options, especially on a return to this 2162 area, flat 200, and roll over again. It could come down here because, again, there doesn't have to be a takeover. It is a takeover candidate, though, longer term. But you will get these insane moves, especially if rumors come out. And this was the activist joining the board, so you will get these absolutely insane moves. Yeah, if you get a close, here's another thing you can do, Sterling. Let's flip this around. We already know it. Close below the 62.5. Yeah, you can easily do this on this down move above this, that 50% retracement, 24.20. But if this starts closing really on a closing basis above this 200 again, I'd keep a real tight area. You can even do it, from my perspective, I could even do it above 23. If it got above 23 on a closing basis, I'd bail on any shorts. Short term. Other than that, if you need a tighter stop, you can do this last little down move and use your 62.5% level. I wouldn't do it at this 50% level on this last little down move because you could easily roll over it here and you have the 200 right there. But you close above 22, 21, or you want an even tighter stop, that would be my tighter stop candidate. Why? Because on a close above 62.5, it favors a retest of the 87.5 to 100% area. And you're back above the 200 on a closing basis. So that's another way you can watch it. Again, I'm not giving you trading advice. I'm showing you how I would analyze it. I'm glad you have stops. I'm glad you know where they are. So I'm just giving you other strategies that you can research and put in your repertoire if you like them. Especially because this is such a key moving average. You see here how, you got that little dip below, but it held. Then you got the big close below. Then you got the big sell-off. This gap up couldn't even get above the 200, and then it sold off again. This one closed right back at the 200, tried to stay above it, and then collapsed below it. So this is very key in here. No financial advice here. You have to say that for legal purposes. And I don't know people's accounts. I don't know their trading sizes. I don't know their durations. It just makes sense. Nor could I manage everybody's stuff on live streams, nor should I. The whole point of this channel, and when people ask why I say that, because the whole point of this channel is to help educate people and to help them learn to fish, not to have me fish for you. I'm not a licensed financial advisor. I used to hold Series 3, Series 7 licenses. I've let them expire because I don't need them anymore. I sit it in my house, and everything we do with Path, I don't need those licenses for. So that's why. I want everybody to learn to fish. And I know you've become a good fisherman, Sterling. You're applying it, you're learning for yourself, and and I love the fact to see that you know where your stop is. I wish everybody knew where their stops were. They'd be much better traders because you're always going to be wrong with stuff. You're always going to have stops. Stops are a natural part of trading, so you better know where they are. And also targets. I think people should trade with targets too. Targets doesn't mean you have to take profits there. Targets means you take an action. What's taking action? You can raise a stop. You're welcome, Josh. You'd be shocked how many people rely on Twitter posts and YouTube videos to trade in the blind, and that's not what this channel is. This channel is to show you different analysis techniques, how to think about markets, how to analyze positions, how to look at different time frames, how you can still have a shorter term bullish trade in a longer term bearish environment, how you can have a short term bearish trade in a longer term bullish environment, how you can learn to read patterns, how you can trade into clear paths, stuff that very few, well, trading patterns some people look at, but too many people just trade emotional, or they say, I think it's going higher or I think it's going lower. And in bull markets, a lot of people get away with that because a lot of stuff goes higher, but then they get obliterated. Everybody mixed up. Tesla traders were especially notorious for this when Tesla was going straight up. Look at the genius trader I am. Well, Tesla's going up pretty much every day. You don't have to be a genius. And then it drops, and their whole strategy is just buy more, just buy more, just buy more, and hope it bounces. That's not a trading strategy. That's a recipe for long-term death in the markets. Again, have strategies, and I don't care. You don't have to use anything I go over. Use your own strategies, but just know how they work and know how to trade them. I can't go over 500 strategies in here. Pick a few and master them. I have a handful of strategies I rely on daily, and I've become very good at them. So pick what works for you and spend time to master them, and then you'll be good to go. And if you find something doesn't work for you long term, discard it and research another strategy. But pick something core. And I think everybody should learn doubles, because doubles, you know what, I've been trading doubles since the 90s, and they work. Not 100%, nothing works 100%, but they are very reliable pattern, and people can easily learn to trade them. And you don't even need indicators to trade them, because even you can work out your stops, your profit targets just with a calculator if you need to. So there you go. All right. Appreciate the education. This stuff will stick with us forever, which is the point. And I want you to carry it forward and also share it with people, especially when you turn around and make a lot of money in the markets. And I hope everyone does. Share your information, share your knowledge, and pay it forward, and help other people, especially people who rely on YouTube and Twitter to make trading decisions that they could have got away with in a raging bull market, but now the conditions have changed. Help them find some good education. I don't care who it is. It doesn't have to be me or Bob or anybody associated with us, but just make sure it's good education. It says, seriously, well, thank you. So I'm guessing from what Bob said during the last video about how if stagflation sets in, stocks is not where you want your money. I guess that means we just trade price action in and out quickly. There'll be stuff that still does well in stagflation, but you have to be a lot pickier, and you wait for decent setups. And if you're finding, here's my little thing. If, like here, let's just go back here. Can NVIDIA get a bounce? Yeah, it can easily get a bounce. Is it a long-term buy? Is this something I'm buying and walking away from? No. So you can get bounce plays, but we're against even if you check in on something, check in on the weekly rotation zone. If you're against the weekly rotation zone, it's only a bounce play. All right? Until you get squarely above the weekly rotation zone again. For example, when we had, look, back below the weekly rotation zone, look at these little bounces. Were there bounces? Yes. Bounce. Bounce, bounce, but then we find, look, it's still sell off again. Then we put in a bottoming pattern. Okay, and then once you get above the weekly rotation zone, these bounces, like pullbacks on the dailies, these are where you don't have to manage it as tightly. Why? Because look, you can get massive runs in these things. Rotation zone, pullback. This becomes a lot easier to trade than trying to do this. Look, you get a 1 week bounce. You get a 1 week bounce. Here you got a little bounce, but then just, gap down again. Even this longer term bounce back to the 50 and then rolling over again. It gets harder to trade in those conditions. But look when it was last time. Look at this. When with the weekly rotation zone back here, you have 16, 17 even went sideways. Then you got the breakout, but then this is a lot easier to trade than this. And look where we are again. It's crossing, especially if once we break below about 206 again, or I'm not touching these. Now, could we bounce up to 244? Yeah, but this is nothing I walk away from. So anything you're looking at, just glance at the weekly rotation zone. Or I like to glance at this thing. Technically, this has not made a long-term sell yet. We are against the weekly rotation zone, so that's where I don't take it. But once this goes into a long-term sell, then I'm really not touching something. Because I have to be so quick and nimble. Whereas you can trade these intraday. But do you think I'm going to keep a stop like way down here? No, because again, this could roll over and stop me out. So that's where it gets harder to trade. Now in a stagflationary environment, I wait for really strong setups. I wait for outperforming sectors, and within those sectors, I wait for stocks that are outperforming the sector or have really strong setups. And I get very, 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 very picky. And I also focus on other stuff. I'll continue to focus on commodities or commodity-related stocks. And if there's nothing to trade, you don't trade. If you can't find good setups, you don't trade. There doesn't have to be as many trades in a downward market. You can also trade inverse ETFs. You can trade things just like I watch those ratios, and you can trade those value or growth indices depending on what's going, because then you're trading a basket. And you can even trade, you can find option plays, stuff like that. So that's the way I just get a lot more picky. A lot picky. Where's the weekly rotation zone for XPEV? Again, we went through, geez. Well, the weekly rotation zone is all the way back at 31.45, but it crossed back here at the end of January. So yes, can you get bounces? I bet you have now with this. I haven't looked at XPEV in a couple days, but there's your next pausing area. I see a short-term play could be a gap fill play, Abraham. But longer term, am I going to try to even hold a little play here back to 31s? No. But there could be a gap fill play here, which would be an intraday play. Look, you got to play above about 2190, 2185, 2190, little play to 2291 because you can keep a quick intraday stop. So if this rallies, you can keep a quick intraday stop and play for a gap fill. But is this going to be a long-term buy pattern? No, because here's your daily rotation zone. So you fill the gap. Let's even say you rally a bit beyond that. You could roll over again. So you have to be really nimble on these plays. So would I buy XPV here and just walk away? No. Is there a play? Yes, but is it what's a walk-away play? What is a walk-away play? XPV is not a great example. Let me get to something like when you have a walk-away play is more like when I get what did I get? AAP. All right, like an Apple, that's just a strong trending. So I watch for daily pullback buy plays. Why? Because you can get in a daily pullback buy play, set a stop, and pretty much walk away and just raise the stop every so often. I keep it below the daily rotation zone, so you finally get a stop, so you could get in on a pullback here, and look how many days you're in it. And I just keep moving up the stop slowly. I can walk away from that trade. I can update it once a day. XPEV, I'm not walking away from it because I can't just buy here and do something every day. Why? Because even if it rallies a couple days, slams in the rotation zone, rotates back down. Now, could there be a longer term play eventually next PEV? Yeah, I'd be watching for a double bottom. Let's say it rotates up here and then rolls back down, and then I get a double bottom trigger. That's more of a longer term walkaway play because I can, on a close, I have my targets. I can set alerts and I can set just a longer term daily close, and I could be in that. That's like a medium term walkaway because I could be in that for a few days, even a week or two as it unfolds. I don't have to monitor it as closely. But otherwise, this, based off this price action, is not walk away for me. There's a lot that's not walk away at this point. Even stuff we were talking about, NVIDIA isn't a walk away play for me. There's another play that I'm watching for above 232. We keep NASDAQ rallying. I could see us getting back to this 50 and this prior support becoming resistance area right in here. But that's not a walk away. Why? We could even hit that in a day. And then do you think I'm going to just sit here and let this roll back potentially down and go to new lows? Not on your life. Not with that semiconductor index having a major long-term sell signal. What would change for like something like NVIDIA to be a more get back into walkaway mode? I definitely have to get above this 245 level on a closing basis. And then really, I'd really want to get above 267, then it'd get more into a walkaway area. Thank you, Abraham, for the super chat. Great lesson. I'm going to wrap this up now. Thank you, Wavy. XPV trading for 20 billion, 6 billion cash on hand, 250,000 deliveries for this year. I get that. And why is it not a walkaway play yet? Because it hasn't put in you're still fighting the trend. We're still fighting the trend. And as long as we're fighting the trend, it can keep rolling over. So, again, you are the XPEV master, Abraham. I'm glad you're following it so closely and you are following all the fundamentals and you know their cash flow and everything else. By the way, what are their I mean, their still earnings per share is still negative, so they at least they have, but see, their market cap is still relatively high. Not saying long term it can't be a fantastic company, but right now the price action is not a walkaway play. What was more a walkaway play recently? I'll give you a couple of examples of stuff that was still walkaway plays. We were in this. I actually just exited this. And I'll be watching for a pullback to possibly do another short-term entry. But see here, look at this momentum bars into this kind of move. This was more of a walkaway play for me. First cross rotation zone back above the 200. Can get in a position and just have to raise the stop occasionally. That was more of a walkaway play because you got stuff in your favors. You broke below here. You see this double bottom pattern. It turned into a triple on that time frame. But on the weekly against that weekly 50 triggering here into a clear path move, that's why I was in it. And that's something I didn't even have to raise a stop every day on. So that's the kind of thing I'm more looking for forwards that I put in that walkaway play category, meaning I just have to manage it. I don't have to micromanage the position. Hope all that makes sense to everybody. Again, thank you for attending. And please join me tomorrow for the market preview. We'll take a look at what happened during the Asian and European trading session hours and prepare ourselves for the FOMC announcement and press conference tomorrow. With that, I really appreciate everyone being here. Thank you again, Abraham, for the super chat, and I will talk to everyone later. Bye for now.